Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of JForex Indicators Explained, we will be looking at one interesting pattern which is used as a bullish to bearish reversal pattern. The name is head and shoulders pattern. We will see how we can utilize this formation to look for the opportunities where we feel that the trend reversal is happening and we might be able to take advantage of the trend reversal and go for the initiation of the new trades. So let us now head to the JForex for the newly released trading platform from the Dukascopy Bank SA. There is the Euro USD chart with the each candle break defined at 5 minutes, hourly. For adding this formation, you can do a quick search or you can simply go to the add indicator option and see where it is listed. For trying the add indicator option, you go to this list of pattern recognition and here you will find it on the lower side of this list. We have seen many of these pattern recognitions earlier. Now we are reaching towards the end of the list and here it comes, head and shoulders pattern. So from here you can add it or you can simply do a quick search, type in the name head and shoulders and you will have it. Okay, now let us see where we saw the instance of this pattern being forming on this chart. All right, we got it one instance here. From this formation, you can see that this formation involves P highs, of which two are of around the same levels, and the middle one, the middle high, is the highest of the three highs. That is the requirement, and high, both these highs on the side of this middle high needs to be of around the same height, and then this middle one needs to be higher. So these three highs taken together indicates reversal of the salt because earlier the price was rising and it went on to rise after correcting from this first high. It rose higher, but after that again this correction happened. In the third instance, the height was not identical to the middle high, rather it was more identical to the first high, and from there on the reversal came in. After the confirmation happens of this reversal, we can look to initiate the trade where we can be fairly confident of the trend reversal and try to initiate the trade while keeping the stop loss in a manner which will keep our risk lower and the rewards higher. So we can do that using this formation, as the risk reward ratio would be quite favorable, and this is an indicator which gives you the idea of the new trend forming on the chart, new trend reversal happening on the chart. So using this formation, you can then try to initiate the trade with the expectations of the new trend to continue at least for foreseeable future foreseeable time, and the time horizon is going to depend a lot on what time frame you had chosen for the identification of the head and shoulders pattern. The head and shoulders pattern is quite simple to understand, as I explained to you in this session, and it is also quite reliable. It is one of the most reliable pattern formation used in the technical world of trading, but it is not that frequently forming. No matter which time frame you use, it is not going to form that frequently. If you use lower time frames, then I think on 5 minutes or even on 1 minute chart, it will take a considerable amount of time for you to give you the idea of reversal happening in the underlying instrument. So this is the USD chart where I have now shifted to the each candle period being 1 minute, and here we got this one instance. In this instance we had these two highs which are on the side of this middle high of around the same level, and then the price dipped below this horizontal line. After this confirmation came in, you can go for a short sale trade while keeping the stop loss just slightly above this middle high, which is the swing high which we can utilize for initiating the trade. Now in this case, if you had initiated the trade with this stop loss, it would have gone on to end in loss, as we saw that this trend reversal didn't really hold, and soon after its formation in next hour or so, we saw the price again reverting course and going on to rise higher and higher. So this would have ended up in loss. So for this kind of scenarios where the trade ends in loss, you would also need to ensure that the risk is minimal. The risk should not be too much. The risk should be commensurate with the possible gains which can accrue if your trade goes right, and if the trade goes wrong, the risk has to be of limited quantity, limited magnitude. It shouldn't wipe out the account. That is the whole purpose of the trade optimization, where we try to minimize the risk and maximize the gain. So this is one example where the trade would have ended up in loss, even though we have this reliable formation of the head and shoulders shaping up. And here is a 1 minute formation, so that also reduces the reliability. The higher time frame you use, the more reliable it is going to be, simply from the perspective of it holding well for the duration you desire. Even if you are trading from the intraday, I think 1 minute is not really the time frame you should be following. Rather than that, maybe 5 minutes or 15 minutes can be given a chance. And for swing traders, the time frame like hourly, 4 hourly will serve better. Let us try to shift to 5 minutes and see if there were any examples which formed recently in the market. So this is the chart formation, and we are yet to come across. Okay, here we are coming across one such formation on 7th of March, and in this case the price formation provided us a reversal, bearish reversal, and then the price indeed continued to trend downward for a while, but it again reversed course, making a high slightly higher than this prior swing high, this middle high, and then it substantially nosedived to go on to decline around half a percentage point, and it continued its decline lower and lower. So this instance would have given you a profitable trade if you had enough of buffer in place above this highest point of the head and shoulder pattern. So there is a formation which is going to work sometimes, and also on sometimes it is not going to work. So to figure out these trades, you will always need to keep this in mind, that risk reward ratio has to be good. The risk has to be managed in a way that it shouldn't affect your equity too much. One single trade should never be too much of importance. It should not be over leveraged. So that is one key takeaway from these examples, where we have seen profit as well as loss being incurred by this formation. Okay. In terms of editing, there is nothing we can do, because there is a formation which is going to take into consideration the price formation, and all we can do is vary the candle period. You can go for hourly, 4 hourly, 5 minute, 10 minutes. All these options are there. So depending on the time horizon you are looking to trade, you can vary these time frames, and on most all the time frames will have the opportunities using this formation. It will keep taking shape on all sort of time frames, and accordingly you will have the reliability factor also. So this is the 4 hourly formation, and in last couple of months we haven't really seen any head and shoulder formation on the chart. All right, now I am again going to revert back to hourly. So here what I am trying to say is that you can only opt for different candle grades for defining of these head and shoulder pattern. There is not much you can do in terms of editing apart from that. And the formation, as I said, is quite reliable. It is going to help you optimize the risk reward ratio. The clear cut idea is given of where to keep the stop loss and what kind of levels can be targeted on the lower side when you get these bearish reversal confirmation within the head and shoulders pattern. So that's all from my side for today's trading session. If any of you have any query or any idea to share, do write to me in the feedback, and I will be more than happy to take the discussion forward. See you next time around with a new formation to talk about, new formation to discuss, new formation and its possible uses. Till then, have a fabulous day ahead. Goodbye.